Hi everybody, it's Stephanie with Long and Foster Real Estate, logging in to have a quick discussion on insurance for investors. So I have a couple of topics written down. You're going to see me reference this from my pad below. But also wanted to say that in thinking about the whole process of Facebook Live, and while we have been doing evening meetings, now that we're doing them online, it seems that maybe lunchtime would be better. So next month, I'm actually going to switch the time to a 12 p.m. That way people can log in on their lunch break if they're working. But if you're working during the day as a full-time investor, then you don't have to take time away from your family in the evenings. So wanted to talk a little bit about insurance. Why do we have it? What kind do we need? And thinking about other kinds of coverages that you might not have as an investor. So with an investor, a couple of different types of properties you could own. So we'll talk a little bit about each one and what you could possibly need. Flip properties. Oh, my son's little head just popped into the picture. Sorry about that. So with flip properties, sometimes you have them vacant, sometimes you are in the process of renovation, sometimes you have tenants in them, and sometimes they're just sitting empty, beautifully finished, and waiting for settlement. So most traditional insurance policies, if you called up Nationwide or State Farm, they don't like insuring vacant properties. Actually, the moment that they realize that there is nobody living in the property, you're probably going to get a cancellation notice. So you would need to have a commercial policy that would cover it as vacant, or you would need to have investor insurance. So in the subject line underneath this video, you're going to see the 3 different insurance companies that I use and I would recommend to any investor out there who needs coverage for their flip properties. So the other type of property that you could have would be a rental property. With a rental property, sometimes you have time between tenants when it is vacant, and you may need that vacant coverage that an investor policy would cover, even if you're using a traditional policy. So my husband and myself, we have a great real estate agent. His name is Jim Laley, runs the Allstate agency in Percy. We use him for our personal home property, for our business policy, for our rental policy, for an umbrella policy. We have life insurance policies. So one guy can take care of everything for you. But once you have more than 5 properties, a traditional carrier like Allstate is not going to want to cover you. They're going to want you to go to another company to do the next 5 properties. They don't want to have more than 5 investment properties at a time, which is what I have seen in the past. And what I've heard when I've had more properties, when I've had 3 or 4 flips going at a time in personal property. So we kind of maxed out the amount that a traditional insurance company would cover us for. So with your business, you are a real estate investor, you're a rehabber, there's liability, there's vacant property, but most importantly, I've always thought as an investor that I wanted insurance for my flipping business. That way I was covered if, say by chance, a contractor I used, they didn't do a great job and a second floor balcony collapsed, that they couldn't come back on me after the sale if I had a licensed and insured contractor. But obviously, you know, people are going to go after as many people as they can if there is an issue with your renovation. So that's when I actually reached out with Allison. She is a commercial insurance advisor, and she'd given me a quote for liability coverage as a real estate flipper. So something to think about if it is a concern for you and your company and your business. Other parts of coverage to think about: loss of rent coverage. So, you know, if you have a pipe burst and your tenant has to go live somewhere else while the house is getting fixed, that there is coverage that would pay the rental amount that you would be getting if your tenants aren't paying it. We talked about vacant property coverage, but I also want to talk about liability coverage. So whether it's vacant or occupied, a guest of your tenant comes to the property and they fall down a set of stairs. Are you covered? Did your clients and your tenants get renter's insurance with liability coverage? Because they would go to that policy first and then hit your homeowner's policy second. if there was a big problem with whoever fell on your property. We talked about traditional carriers. Sorry, I'm just looking at my notes because I like to talk. The traditional carriers are looking to insure properties that are titled in an individual name. So if you buy properties under an LLC, a partnership, an incorporation, most traditional coverages are not going to write a policy for you. You are going to have to go to a commercial insurance agent, or you'll have to go to the investor's insurance that I talked about, REI Guard. They will write a policy for somebody who titles it, say, in an LLC. I buy properties under an LLC. Another topic to talk about is the personal umbrella policy. So you have each property insured, and you have building coverage and you have liability coverage on each property. But say there was a loss that exceeded the coverage on those properties. That's where an umbrella policy would be your safety net to make sure that nothing comes after your personal assets. So we do have an umbrella policy. It's a peace of mind just to make sure that we're covered if somebody were to suffer a catastrophic loss in one of our buildings or our properties. And like I said, well worth its weight in gold. So something else to talk about, because I do help investors buy properties at sheriff sale. When do you need to insure the property? As of the moment that you give your 10% down hand money, you are now what's called an equitable owner of that home. And your 10% down is at risk for being lost if there was a loss between the time you were the winning bidder and you made payment in full with the sheriff's department. So while you don't have a deed in hand, if you have money in escrow or paid towards the cost of a price of a property, you're what's considered an equitable owner, and you can get insurance on the property. So anytime one of my investor clients or myself, we win a property at the sheriff's sale, as soon as I walk out of the building, I call my insurance company and I have a policy created and started for that. Here's the other thing. If it's 10 days, 20 days, 30 days between your winning bid and when you pay in full, say ice storm and the roof collapses. If somebody falls on the sidewalk outside because nobody's shoveling or putting salt down, who's responsible? Well, any good personal injury attorney is going to find out that I was an equitable owner as of February 6th, and they're going to come after me. And if I don't have insurance coverage on that property, they're coming after me personally as an equitable owner. So food for thought. If you are buying, if you are putting money down on a property, at what point do you feel comfortable purchasing the insurance on the property? Me, as soon as I have money down on a property, I want insurance coverage, especially with sheriff sale properties, because most of them are in bad shape, and most of them, nobody is looking at them or checking on them or shoveling the snow unless you're going to do it. Another thing with sheriff sale properties, definitely the minute that you are the winning bidder, go over to the property. If it is vacant, change the locks, secure it. Make sure nobody can get into that house unless they're breaking into it, to definitely keep your 10% or whatever money you have down on the property in play. You don't want anybody being able to have a claim against your money that you have on that house. Something else I want to talk about is replacement value versus cash value. Most of the insurance policies for investors are going to insure you at the cash value. So the cash that you have into the project, a lot of times they're not going to cover the renovation cost until you tell them that it is finished. So as an example of this, if I purchased a home for $100,000 and I was doing a $50,000 renovation, so my closing costs were about 6%. So my cost into that property is $106,000. With a cash value policy, I have proved that I have $106,000 into that property. And if I have, say, catches on fire, lightning hits it and it burns down, they're going to cover me for $106,000 not 156,000, unless I have called them and said my renovation is complete. I'm just waiting on settlement. And now they know, if I have told them what my renovation costs were, that the actual cash value of my investment is 156,000. Where the other side of it is replacement cost. And this is something that most traditional carriers will provide to you based on what they feel the property could be replaced or repaired for. So two very different types of policies, and depending if you need the replacement cost or if you need the actual cash value. Also want to talk about that most traditional insurance carriers will not cover stolen pipes on vacant houses. They will not cover frozen pipes on vacant houses, but the investor insurance or commercial insurance with specific riders added will give you that coverage. So most properties that you're going to renovate, it's going to be PECs, not as enticing for people to steal. Haven't seen it as much lately as I did 3-4 years ago, but it is still out there. People will go into vacant properties and steal copper pipes. Heck, sometimes the last occupant will take the pipes with them when they go because they cash them out. I don't know what they do with them, but they take them with themselves. So you do want to make sure that you have coverage for any type of loss that you could have, and specifically think worst case scenario. What's the worst thing that could happen after I buy this property? And then ask your insurance agent that you choose to use how you could be covered to protect yourself against that worst case scenario. If it burnt down, if it was struck by lightning, if a squatter broke into it and fell down the stairs. Obviously, we never want these things to happen, but you have to think worst case scenario and how do I protect myself as an investor. I also want to talk a little bit about flood insurance. So my last investor group online, we discussed a little bit about how floodplain properties are opportunities for investors. And I firmly still believe that. We sold a property in a floodplain in Coopersburg a couple weeks ago. I personally purchased our new office in a floodplain, so it's near the creek and the rail trail, which is nice. We talked about ways that you can get the property out of the floodplain, but I also want to talk about what if you can't? What if you need the flood insurance? So for us, when we took out our flood insurance policy on our new office building, we maxed out the deductible on the property. And two sides to this. So you buy a property, you look at it and you're like, yep, this thing's going to flood anytime that there's high water or runoff, or there's no way this property will ever flood. The whole town would be underwater if this property flooded. So two different approaches. Our new office, the whole town of Hellertown would be underwater if our office flooded from where it is, but it's in a floodplain. So with that, we maxed out our deductible. It was a $50,000 deductible to get our premium down because we are confident that that property is never going to flood. If you do have a property that you feel may flood over time, oh, people are popping up here. If you do have a property that may flood over time, you may not want to maximize your deductible. You may want to minimize your deductible so that when you do have a loss, it isn't a huge out-of-pocket expense to you. So whether you are a cash buying client, whether you are a hard money buying investor, or you're getting traditional financing on the property, will usually dictate if you are required to get flood insurance or not. Any lender I've seen, if it's in a floodplain, you have to have a flood policy, period. With some private money, they may waive that contingency of getting that requirement of getting the flood insurance if you can prove to them that there's a reason why you don't need it, that you have applied for a LOMA on the property, that it's imminent that you're going to get it. If the property has never flooded over the course of its construction, which you could probably find on the FEMA floodplain map. So definitely get your flood insurance quote early. I mean, the minute that you put the property under agreement, call your insurance agent. Some of them have the numbers on the side of the screen. Call them, get a quote. Little known fact, it is a state regulated amount. So it's based on the property, what floodplain level it's in, and the value of the property. So you could go to 20 different insurance agents and the flood insurance premium is going to be the same. So find an insurance agent that you know and trust, that you will use again and again. And if I call them, I know I'm getting the best price, so I don't have to call 30 people. But that is my best advice on floodplain properties, because it could make or break you getting the deal done. So if flood insurance comes back at $7,000 a year, maybe you don't want to buy it, but maybe you do. But know that information early so that there's no hiccups at the last minute. And that's enough about flood insurance tonight. High deductibles we talked about. Is it worth kind of self-insuring your property for small claims and getting a much larger deductible so that you don't have those monthly premiums? I think it is worth having a higher deductible if you're willing to take care of smaller items. When you have so many policies, it is a significant savings to have higher deductibles. And unless there was a catastrophic loss in the entire area, you're probably not going to get hit with repairs on every property at the same time. So something else to think about when you think about coverage on your investments. Another thing to think about, so as a landlord with tenants, and now so many of us have management software that has all of our clients' information in it. Our clients are making payments online to us. Are you protected from cyber threat? I mean, if a hacker got into your system and stole the credit card numbers for all of your tenants, they have a claim against you if you are not protecting their information that they are providing to you. Same thing in the real estate world. If we're not protecting our clients' information and somebody gets into our systems and uses it for their advantage, clients could come back after us if we are not taking the proper precautions and safeguards with their information. Sometimes with applications, we have social security numbers, we have proof of income, we have tax returns, we have credit card numbers. There's a lot of sensitive information that can be part of running a property management or running your rental business. So it's definitely important, if you're worried about it, if you don't think you have adequate security or coverage, that you are talking to your insurance agent about cyber threats and cyber coverage. So if somebody were to have a claim against you at some point, that you are covered and your insurance policy would kick in before any personal liability would take place. Something else to talk about too, if you are a landlord and you do not require your tenants to have renter's insurance, every property that we do, we collect renter's insurance. I think personally, it's a huge mistake to have rental properties without requiring your tenants to have renter's insurance. And I tell them, if the place burned down tomorrow, you still owe rent. If you have renter's insurance, they're going to pay to put you up in a second location. And if that tenant is the one that left the candle burning that burned down that property, then their liability coverage on their renter's insurance would kick in before your property insurance would. Another thing, you want to make sure that the landlord is named as an additional insured on that renter's policy. You want to make sure that for two reasons. One, if there is a loss, that you're covered. But two, if they cancel that policy or they don't pay that policy, you get a cancellation notice. So you know that they are not going to be covered, which in all the leases I write is a requirement. So that would be a breach of the lease if they do not have renter's insurance. So very important that your clients get a renter's policy if they don't have one, and make sure that the landlord is an additional insured. These policies cost about $150 a year. Most of the time it's like a $25,000 contents coverage for them. So if they did burn it down with a candle, that would cover up to $25,000 of replacing their furniture and clothing, personal contents that they have in the property. But the $100,000 liability would be what is used first to repair the damage that they caused to the property. And then any additional damage would be covered by your homeowner's insurance. So very important, tenants to get tenant coverage, named insured for the landlord, part of the lease. I wouldn't do a lease without it anymore these days. And then for your policy on the property, the homeowners, you can usually get a reduction of the rate if you can prove to your carrier that your tenants have coverage in place and you are an additional insured, because it relieves some of their liability if the tenants cause problems to your property. And I'm at the end of my notes today. Just wanted to see if anybody had any questions, anything that I could answer. I see a few of you have joined us online. But like the last event that we did on Facebook Live, which is a live webinar basically, we had more views by 12 o'clock the next day than I've ever had in person. So I love the idea of Facebook online. Everybody has Facebook, everybody can log in and see it. And if you would like to replay the information, if you want to share the information with somebody else that you know, it is recorded on our Salanik Team Real Estate Investment Group page. So you can just log back in and play the video again and again if you like. And if you have questions, you can shoot me a private message, you can email me, you can call me, but I highly recommend, I gotta go that way. I highly recommend the people I put in the comments, true professionals. And Allison with the commercial insurance, I mean, she quoted a property, a huge property for my clients. Basically, they didn't get coverage. I thought they did, and we were 5 days away from settlement. She was out at the property with her team the very next day, and they had a policy quote for my clients within 3 days for a $3.5 million purchase, which was incredible, the level of service that she gave when I called her on it. Check us out online, salaniksold.com. You can reach us, phone, email, private message, text message. We're here. We also have a first-time home buyer seminar coming on March 9th at our new location in Hellertown at 462 Front Street. So if you have anybody who is interested in buying a house with us, send them our way. We'll give them lots of free information on the process, and we love getting referrals. Have a great night, everybody.